Welcome, guys. So, one of the guys in the group uh, asked me, what do I think regarding AUDJPY? So, I've decided to do this top-down analysis right from MWD all the way to the entry H4. Now, guys, you need to engage with me, especially on the group. If you feel like you're the type of person who likes to ask questions, right? You can even private message me on Telegram, and then I can get to grips to your question and answer you accordingly. So one of the guys asked my thoughts on AUDJPY. So I'm going to do a top-down analysis and come to a conclusion to say, okay, if I'm going to trade AUDJPY, I'll be looking for such and such entries, whether long or short. So let me not waste much of your time and get into it. So this is a monthly chart, AUDJPY. This is a pair that I don't usually trade these pairs, only when I have a clear directional bias based on institutional sponsorship. Now, coming back to that fact of institutional sponsorship, we've got Aussie dollar and Japanese yen. Already, I know that Australian dollar, the central bank rates, they are set at 0.10%, and then the Japanese yen, the central bank, Bank of Japan, their interest rates are set at negative 0.1. Let me just double check. centralbanksinvesting.com. So you can see here we've got Reserve Bank of Australia 0.1%. Their last meeting was recently, I think last week, and there wasn't any change. Their next meeting is April the 5th. Expect to increase, they should increase their rates there. Then coming to BOJ, we've got negative 0.1. Already, I've got a country with higher rates against a country that has got lower rates. Already, I should be looking for a stronger Australian dollar against the yen. You see? But now, there's one thing which has to fulfill that concept. If I'm looking to buy a stronger currency versus a weaker currency in terms of institutional pairing, right? What do I need in terms of institutional pairing? So I'm just going to go to the notes that you've got from week 3. The notes that you've got from week 3, and then we're going to see what we need. This is the institutional pairing that we need. We need dollar to be bearish for us to buy the strongest versus the weakest currency. Right now, the strongest is Australian dollar. The weakest is the Japanese yen. So I need dollar to be bearish for me to get high probability buy setups on AUDJPY. So coming back to the monthly chart, I'm gonna switch here, default monthly chart. Then I'm gonna go to my line chart. Now remember, the line chart is very important. Now, once I go on the line chart, what is it that I'm looking for? I'm looking for swing points, right? I'm looking for swing points where price is going to make a huge turn to the upside or to the downside, right? This is what you look for when you go onto the line chart. Now, with that said, do I see any swing points on this monthly chart? Right now, okay, I forgot one thing. Let me switch back to the candlestick. Now I need to highlight my 9 to 18 month profile. My 9 to 18 month profile is coming right here on this first down close candle here, right? This down close. So this is my 9 to 18 month profile right here. So you can clearly see there was an expansion, then market dropped, consolidated, and expanded again, reversed, retracement, retracements. Now it's pushing to the upside. Now I'm going to go to the monthly chart. Now the reason why I highlighted the 9 to 18 month profile, because that's the price action that you need to focus on. Now we can clearly see we've got a swing low here, we've got a higher low. Market created a swing low right here. See, we've got a swing low, and then price rallied, broke outside of this short-term high here. Market broke out right there. That was a change in market structure. See, we had a change in market structure right here at this point here. Let me see if I can mark it. At this point, we had a change in market structure. We violated this short-term high. Price broke to the upside, reaccumulated, and another push to the upside. Now, I've got this. Okay, this is not much of a swing point, but this one here, that was the new high that was formed after price left this higher low. Then there was an expansion, and then it created a new high right there. Now, once it created this new high, we had this funny price action here. I don't know what even to call it, but we can see this is our lowest point before another push to the upside. So this level here is the lowest point that we need to take note of. Now, these are the interesting swing points on my monthly chart. These are the interesting swing points on the monthly chart. Once you have done this, guys, see, you've done already say a quarter of what you need to do. Now I'm going to switch back to the candlestick. Now I don't use the line chart on the weekly or daily. I only use it on the monthly charts to highlight my zones. Now I'm going to put a blue line here so that I know where my 18-month profile starts. You can see we've got 18 candles from here. So that's September 2020. We've got 18 candles of price action expansion from a area of reaccumulation. Then price reached upside around 85, and then it dropped, traded again to that level, then it dropped. Right now the draw on liquidity already I can see is between these two relatively equal highs. That's the draw on liquidity. Now keep in mind, Aussie dollar higher rates, yen lower rates. Long trades are ideal. Generally you expect the Aussie dollar to gain against the yen because of the interest rates, but using institutional supply and demand, we need dollar to be bearish for us to have high probability buy trades. Now that's our monthly profile. Now I'm going to remove this gray shaded area so that I've got a clear chart. Now in that 9 to 18 month profile, I've got a bullish order block right here, right? This is my bullish order block on the monthly chart. Do I have anything interesting to the upside? Not really, but we've got a fair value gap on the monthly chart. So this is bullish order block. We created a new high. So we've got our monthly bullish order block, and then we've got a monthly imbalance here, inefficiency in terms of price action. So this is coming in at 101. I'm just going to call it that 7710. That's basically 7710, which is our institutional price point. Now, from this high to this candle's low, that's where our fair value gap is defined, right? So we've got a fair value gap between the two red lines. That's a fair value gap on the monthly chart. You can see our price returned to that level and found support and rallied. Importantly, at 78.15, price dropped to that level and found what? support, and then it rallied. So what is 78.15? That's our old swing high, which was broken to the upside when we had a change in market structure. You see, if I go to the line chart, this swing point here, this is where price found support and it rallied to the upside. So we had accumulation here, trading below these two equal lows, reaccumulation here, price turning to fair value gap in the form of a monthly fair value gap, then reaccumulation, price rallied, reaccumulation again inside fair value of a monthly fair value gap, then it created a new high. Now remember, when price is moving to the upside, what lies above old highs? Old highs, we've got what? Liquidity pool in the form of buy stops. You see, this is all on the monthly chart. It becomes easier once I get to the weekly and daily chart. So we've got a liquidity pool here of buy stops. Why is this X so big? Right, so we've got a liquidity pool there of buy stops. Now, of course, you're focusing on the 9 to 18 month profile, but this liquidity pool, can you see where it's coming in at? Right, it's coming in at a premium zone where this fair value gap here, all right, there you can see I've used this high because that's the highest high from all these here. Highest high, highest high, highest high, highest high, highest high, and then higher high. So we've got a higher high here. Above that higher high, there is what? A liquidity pool of buy stops. Now, those buy stops, they are inside the monthly fair value gap. Now, that's your draw on liquidity. A country with higher rates, a country with lower rates, your draw on liquidity is to the upside because you're expecting price to move to the upside. You're expecting the Aussie dollar to gain against what? The Japanese yen. Now, that's your monthly focus. You already know where price is highly likely to go on the monthly chart. So price is likely to trade up to this level here. So that's let me see what price point is this. So that's basically 86.30. 86.30, right? 86.30. That's your draw on liquidity. So that's probably the high on this candle here. Yeah, 86.30. Now that's the monthly chart, right? I don't have any interesting price action here or premium or discount areas that we might need to take note of. So now I'm going to go to the weekly chart. Now, once I go to the weekly chart, right? Now remember, this is your 9 to 18 month profile. Expansion, retracement, expansion, retracement, expansion, retracement. Now we've got an expansion. Now this is the weekly chart, guys. Now on the weekly chart, already I can see we've got a bearish order block right there. And this is the mean threshold, right? That's the mean threshold of the bearish order block. I'm going to give it a different color shade. I'll make it blue dotted so that you know the difference, right? So that's the first one that I took note of because that's the closest in terms of price action, right? In terms of price action, that's the closest PD array that we've got. So it's coming in the form of a bearish order block. What else do I have? Right, this is our last down close candle, just broken to the upside here to be of interest once price came back to that level. We also have this last down close candle. So you can see price is creating higher low, higher low. Price is in an uptrend, right? Now, on this weekly chart again, we've got this fair value gap where price is currently at right now. So you would expect price to find a bit of resistance around the 8467 area. You would expect price to have a bit of resistance. You'd expect the bears to come out fighting. Now, the reason why we are having this huge push to the upside is because of the Aussie Central Bank. Aussie Central Bank was on the calendar. When was it? They were recently on the calendar. Let me go to the publications. I think it was sometime last week or this week. Let's see. Now they're not saying anything about their last release here. Let's see on their website. So the reason why I'm focusing mainly, right, 1 March there, 1 March, that's when the policy review was, which is like 2 days ago. So that was on Tuesday. That's why we saw a huge push in AUDJPY, or any pair that has got AUD as the base currency, right? Any pair that you can open AUD CAD. You see that since with AUD CAD, it might be a bit of a bias in terms of the price action, because we also had the Bank of Canada yesterday. But prior to Bank of Canada, you'd have anticipated AUD CAD to trade to the upside. So AUDJPY, you expect strength in Aussie dollar because of the rate decision that happened on Tuesday. So you can see this is Thursday's price action, Wednesday's price action. Remember, Wednesday AM, that's when the central bank for Australia was on the calendar. Right here, that's where it got strength and it broke to the upside. Now you can see now price is inside our weekly fair value gap, right? We also have a daily bearish order block. Now, what is it that you need to see for you to be confident of shorting, right? What is it that you need to see for you to confidently say, no, I'm going to short AUDJPY, because you're basically going against its trend, right? Because the trend is to the upside. So right now, I would say I'll be looking for long entries with a target at 85 60, 85 60, or even as high as, let me just zoom out if I can see my, okay, let me go to the weekly, 86 300. You see, 86 300 for long entries from discount range. So this is the weekly, right? What discount area do I have for me to be looking out for long entries? For these old highs, right? When price returns there, expect price to find support. But now we also need to wait for this candle to close tomorrow, this weekly candle here, because if it closes above 84200, that's a break in market structure, because you can clearly see we've got a new high now. See, we've broken out of this high, we've got a new high. So the next target is sitting right here at 86.30. That is the next target in terms of the draw on liquidity. You're expecting price to move to this level. Now, some are going to argue to say, okay, but Ivan, we've got a bearish order block there. Wouldn't you think that it's going to provide resistance? Yes, you have to keep that in mind. This is where the calendar comes in, right? I'm going to go to investing.com. This is where the calendar comes in now. You see, then we go to the calendar. Now, let's say we look for tomorrow. Let's see if I've got any. Right, we've got retail sales there. You see, retail sales for Australia, right? And then we also have job application ratio for the yen. Now, let's say these retail sales come out positive for AUD, right? That is tomorrow. That weekly bearish order block will not provide much resistance. But if the retail sales for Australia come out negative, which is mostly likely, remember, we're just passing out now of COVID. So people haven't been spending that much, right? So if it's a case that they come out negative, then you expect the daily bearish order block and the weekly bearish order block to provide resistance, and price is going to push to the downside. Now this is now on the lower time frame. So we also have, let's say, I'm not sure about these job applications. You see, that's the thing with the pair that I don't trade. You see, I wouldn't really know how to react to the fundamentals, but retail sales, this is the spending of the consumer spending. So that's why I just focused on that, because it's general knowledge. So now on the daily time frame, last week I taught you guys a trading model for swing positions, whereby you need the daily to sweep through an intermediate short-term high, which was the high of yesterday, and then but this now on the daily, you need the daily to trade above a short-term high, taking out what liquidity pool of buy stops, but price has to trade into a bearish order block, which is what it has done. Now tomorrow's price action, it should have a low. Tomorrow's candle must close bearish for us to look for shorting opportunities on AUDJPY. But as it is, AUDJPY is bullish. You're looking for price to trade into discount on lower time frame for you to add your long position. Now this is a discount area that we've got on the daily time frame. Now this discount area is coming in the form of a what? A fair value gap, right? So we've got a fair value gap there, and then we've got this daily bullish order block, right? For this daily bullish order block. Now this daily bullish order block was validated because of the rate decision from the Central Bank of Australia. Then we take out the liquidity. So anticipate price to drop to the fair value gap. If we get positive retail sales for Australian economy, then expect price to shoot to the upside, right? If it happens that price is here when the retail sales comes out, which is not likely because it's already at 2 a.m. Market is going to close just now. So this bullish order block is a bit far down. So if price does trade to this, that would be tomorrow's candle, right? Let's say tomorrow's candle during those retail sales, it's right here. And then those retail sales come out negative. If they come out negative for AUDJPY, then expect this level not to hold and price continue. But if they come out positive, then expect AUDJPY to find support inside this discount array, which is in the form of a fair value gap before price pushes to the upside. Now I'm going to go to the entry time frame. Now this is the H4, right? So this is the H4 for AUDJPY. You can see already how price is retracing to the downside, and we've got this H4 bullish order block. So these are all levels now that you monitor when price is trading to that level, heading into a strong fundamental like the retail sales. You see, that's what you anticipate. You go onto your entry time frame, which is H4. Once the fundamental has been released, you can even go as low as H1, right? If I go back to that H4, you can see we've got a fair value gap right here. You see, it's a fair value gap. So this is a level which you'll be monitoring, right? Towards those, say, retail sales. If you're going to trade Australian dollar against Japanese yen, once price reaches this level here, and it's 2:30 a.m., right? Once price reaches that level, and then you see that, oh, the retail sales came out positive for Australian economy, then AUDJPY is going to rally. You see, it's going to move to the upside, right? But if those retail sales come out negative, then you expect these discount areas not to provide any support, and they'll be violated going to the downside with the draw on liquidity way right here. See, that's the draw on liquidity, this lowest point here. That's your draw on liquidity. Now, when I say draw on liquidity, guys, if you short from here on negative retail sales, if you short from there, that's already 24 pips, right? If then fundamentals come out positive for AUDJPY, then you are going long with your target this high here. That's already 57 pips. You see, that's how you have to look at price. Don't just open a chart, do your top-down analysis without linking it now to your fundamental chart, so that you know how you're going to react once price has traded to that level. So your assignment for today, I don't know if anyone's going to watch today, because most of you guys are not watching these videos. I have noted that. Your assignment is to take note of the number that comes out during the retail sales release at 2:30. When those retail sales come out, you can even do this once you wake up, because I know most of the guys, they won't be up at that time, which is understandable. It's 2:30 in the morning. So once you see in the morning how the number came out, whether positive or negative, take note how price would have reacted on these discount arrays that I've marked. If it happened that price is in this green shaded area, which is now our daily bearish order block, take note how price has reacted. So yeah, just to summarize up on AUDJPY, I'll be looking for long entries if I'm to trade this pair, mainly because of the interest rate pairing. I'll be looking for long trade because I expect the Aussie dollar to gain because of its status as a country with higher interest rates. So yeah, I hope that answers your question, and you can make informed decisions on your trading. Don't just think that price is in a bearish order block, so I should be looking for short opportunities. No, make sure you do a detailed analysis, because that bearish order block might not really hold, like what we saw here. See, this bearish order block, it never stood a chance. Price broke to the upside and it carried on. So yeah, that's pretty much about it for today, folks. I hope you guys are gonna watch this as soon as I upload it, so that you can know how to react when price comes back. So yeah, with that, I wish you guys good luck and happy trading.